Hey there, welcome to the Mortgage Rate Forecast with Scott Criss, your mortgage rates and news. It is November 17th, and as always, let's start with the charts. As you can see, this was the election day, and this is post-election. We can see bonds have traded almost $3 less than where we were pre-election. So pretty big impact, guys. We're currently trading at $100.31 this morning. Our resistance is green lines coming in at $100.05, another one at 32 cents. Our support is quite a ways above us. You can see we're really testing the bottom here. We opened here this morning and we're right down here. Resistance is above us at about 78 cents and 99 cents. So right there, guys. As far as the reports, the only thing that really helped us is CPI. Housing starts was bad for bonds. Overall good though, but housing starts were bad for bonds, and unemployment jobless claims were pretty bad for bonds as well. All good for the economy though, guys. So good for your 401k. Bonds, not so much. Not a lot of news, but Yellen did come out today. She's very likely to raise the short-term rate in December. So that's putting some pressure on bonds right now too. But you know what? That could end up helping us. So you figure this bond market, it reacts off of what Yellen may do. So by the time that the Fed comes out and actually increases the short-term rate, we're really not going to see any big change or big movement to mortgage-backed securities because we've already kind of planned on it. So when you're talking to your friends out there and they're like, "Oh, you better refinance before December, before the Yellen increases the short-term rate," tell them no, it's kind of already baked into how mortgage-backed securities are trading right now. So anybody that's trying to rush and lock in the rate before the Fed comes out, it's kind of silly. Okay. To kind of quantify where we're at, Freddie Mac, as referenced down here, reported that the average rate in October of 16 was 3.47%, and the average consumer paid a little over half a point to get that rate. Now, here's where we're at. We're $3.19 worse than average trading in October. So what that means is the average consumer to get a 3.5 right now is going to pay almost somewhere around 4 points. So pretty crazy, pretty big discrepancy here from where we were last month for sure. Anyway, so let's get to the forecast. Here's what we have. Analysts are inconsistent across the board. Short term, long term, some want to go this way, others are going this way. So it's really kind of confusing right now, guys. There's not a common consensus on where we're at. So here's what I'm going to forecast. I think our bond range through next Tuesday is probably going to trade between about $100.05 as high as $100.75. Keep in mind, today we are pushing the bottom end of that trading range. So through next Tuesday, I'm estimating someone that got a quote today, worst case scenario in my projections, I don't think they're going to see themselves get any more than a quarter of a point worse. However, they could get as much as a half point better. So I think there's more room for gain than loss here. So nobody has a crystal ball. Nobody knows what to predict. But if it was me and I had the choice of either locking in today or maybe waiting a few days and seeing how the market trades, I'm probably going to wait a few days just because there is more room for gain versus loss. So more room for gain versus loss. That's the moral. So I would say hold if it was me, but of course the safest thing to do is always to lock. Okay, that's your report for today. We'd love to hear your comments. What do you think? What do you think about the election? Tell me what you think about the election. Would this have happened if Johnson or Hillary was elected? Are people just ramped up on Trump? What's your thoughts? Would love to hear from you down below in the comments. And hey, everything likes to be liked, so does this video. So don't forget to hit that thumbs up. And it's your first time on the page, top left, you can hit subscribe. You'll get a little notification when we release new information on the market. And if none of this made sense to you, little guy at the top right, that's Bonds 101, and that will teach you the basics of how the stuff trades. Anyway, that's it for now, guys. Take care. We'll talk to you soon. Bye-bye.